Money.
And today I thought I'd talk about the opportunity for refinancing. Yes, we still have the historical low interest rates, and yes, eventually they're going to be going up. It's a matter of time. So taking advantage of these low rates, what would be some reasons to refinance? Well, the obvious, to get a lower interest rate. What you want to look at is you want to make sure that it really does make sense for you. Typically, they say it's if you can save 1% or more on the interest rate, it makes sense. But really, you want to look at the numbers. Red or green. Green means go. Red means it doesn't make sense for you and just stop. So how do you do that? A lot of mortgage professionals are going to take your monthly payment versus what you paid in closing cost and give you an amount of time it's going to take to recover those closing costs. That really isn't an accurate way to look at it. What you want to look at is you want to look at your current amortization schedule, where you're at in that, versus starting over on a new amortization schedule. Now, how do you compare apples to apples? Well, if you're lowering your payment, obviously you've got a payment savings. So if your payment savings is $200 a month, just run the new amortization schedule based on making an extra $200 a month savings compared to where you're at in your current amortization schedule, and which one pays off first. It's a really easy way to see whether it makes sense for you to refinance. Now, maybe you're refinancing to shorten your term from a 30-year term to a 20-year or 15-year term. And obviously, in that scenario, it's going to be paying off early. That may make sense for you if you can afford those higher mortgage payments. What you do want to look at is maybe not refinancing to a 15-year, but refinancing to a 30-year, because that extra $500, $800, $1,000 a month that you're going to pay going from a 30-year amortization to a 15-year, you could actually be investing that payment savings into another asset class that can earn you a higher return than the cost of interest rate. So you really want to analyze the numbers and make sure you're doing the right thing. Now, when looking at the cost of interest rate, you want to take in also consideration of the tax deduction that you may be receiving if you're not taking a standard deduction, and as long as the government doesn't take away the interest write-off, which is a whole nother show and a whole nother money chat. But consider the interest write-off that you have. It brings the cost of that down. Now, if you're on an adjustable rate mortgage, refinancing over to a 30-year fixed rate mortgage or any fixed rate mortgage to get off of that adjustable rate mortgage, if you're going to be keeping your house for a longer period of time. If you think that you're going to be selling or doing something with that loan within that period of time, why refinance? Because I know if you're on adjustable rate mortgage, the interest rate is lower than where the fixed is right now, at least on a 30-year. Interest only, there may not be too many of my listeners out there with interest only loans, but if you did have an interest, because you're not taking them now, the interest rates are so much higher. But if you took an interest only loan before the financial meltdown, you haven't had enough equity in your home to turn around and refinance. Maybe now that the appreciation in your property has gone up, you'll have time to refinance or be in a position to be able to refinance. I've had a lot of clients that refinance for an interest-only loan to a principal and interest loan, and the payment was actually lower because the interest rates on your principal, your 30-year fixed-rate mortgages, are so low right now. Last, I just want to mention consolidation of debt, getting rid of PMI, your mortgage insurance. So there's a lot of reasons that you may look at the opportunity to be able to refinance and just run the numbers and see if it makes sense for you or not. That's the Money Chat today, coming up next on the Money Hour. What if you could wake up and your life was transformed? How would it be different? Would you be happier, healthier, more successful, better shape? Would you have more energy, less stress, more money, better relationships? A lot of things could happen when you transform your life, and that's why I'm so excited to be talking with best-selling author of The Miracle Morning, Hal Elrod, right here at 1150 AM KKNW after this short break.